key point that we may want to talk about, the discussion that we may want to talk about is the southbound flows. As you mentioned, really is one of the bright spots that we can observe in the Chinese equity market so far this year. Year to date, we're talking about $60 billion of net buying coming from mainland China to Hong Kong, whereas for the northbound flows, the opposite direction is $1 billion of net selling. I think that really reflects the strong yield-seeking demand from onshore investors, and in Hong Kong, given low valuations, a lot of the equity names here are trading at quite attractive dividend yield levels. So that provides an opportunity for domestic investors to deploy capital in the Hong Kong market.
Interesting. So just talk to us a bit more about shareholder returns in the Hong Kong market amongst the 8 shares, Kinga, and just how resilient are they in an environment of lower rates and slower growth?
I think we're talking about quite a persistent trend going from here. And we can think about that from a few perspectives. Number one, if you look at the cash that Chinese corporates have on their balance sheets, we talk about record high. So they're still generating pretty good cash flows. At the same time, they're reducing capex. So the capacity for Chinese companies to return excess cash to shareholders remains quite significant. On top of that, this is the fact. If you look at the number of companies that have engaged buybacks and paying dividends in the first half of this year, we're talking about again, record high. We've never seen such a big amount of companies returning cash to shareholders. Now, from a valuation perspective, when it comes to investing and trading, that theme, against a backdrop where global rates are likely to come down and onshore rates, Chinese 10-year bond yields, are now at record lows. So for investors who can get stable and visible cash incomes by buying these high dividend yielding stocks as well as stocks that are doing buybacks, I think the attractiveness remains very, very significant. So we are still very much convicted and have high conviction on that theme, at least in the near future.
Kinga, how much conviction do you have towards the China internet names after Alibaba upgraded its Hong Kong listing to primary? Is that a big story that marks out Alibaba? And from a valuation point of view, which name makes the most sense?
I think Alibaba, obviously, we need to wait for a few more days to get the final results, whether Baba will be included into the southbound trading universe. But at least for now, it seems like Alibaba has checked all the boxes when it comes to the criteria for southbound inclusion. Now, based on our estimate, we think that if Alibaba is going to be included, we think that it could attract around $3 billion of potential buying from southbound investors over the next few months. And eventually, the net buying amount could go up to, roughly speaking, $12 billion over the next 1 to 2 year time frame. So I think from a liquidity perspective, definitely this is a big event. And obviously, if the demand for Alibaba shares goes up, it should be conducive to the share price. So our analysts remains quite fundamentally positive on Alibaba. So we think that that liquidity event is just a bonus on top of the fundamental case that we are painting for Alibaba.